Hi, everyone. Welcome to a KE Report webinar featuring Trigon Metals. My name is Corey Fleck. I'm your host for this webinar. I am joined by Rennie Morkel, the President and Chief Operating Officer of Trigon Metals. Throughout this webinar, Rennie is going to provide a production update at the Kombat mine, as well as answer any of the questions that you all send in. You can use the chat function or Q&A function within this webinar software to send me directly all of your questions, which I will interject throughout the webinar. Trigon is Trigon is traded on the TSX Venture Exchange under the symbol TM, on the OTCQB under the symbol PNTZF, and on the Frankfurt Exchange under the symbol TZU2. Now, this production update all coming from the Kombat mine. I've hosted a number of other webinars with the team from Trigon Metals, walking us through really the ramp up at this mine. And now we get to hear directly from Rennie how operations are going. As I mentioned, please email me or please send in all of your questions. If we don't address them throughout the presentation, we'll address them at the tail end of this presentation. So Rennie, let's start off with a quick introduction to Trigon Metals and that Kombat copper mine in Namibia, please.
Thank you very much, Corey. Really appreciate it. Good evening, all Trigon shareholders, stakeholders, and to the viewers at large. Thank you for making time to dial in and allowing me the opportunity to give you an update on where we are in the process. Very exciting times on the mine. I'm sure the news that's come out has been eagerly awaited, and let's maybe get directly into it. So, just forward-looking statements are incorporated in the presentation, so please do go through the disclaimer as we've highlighted. Maybe just for the viewers at large, Kombat mine is located in Namibia. We are 32 kilometers away from a small town called Utawi, right up in the top of your screen where the star is. And Namibia is definitely a mining destination of choice. We have a rich history of mining activities throughout the last 45 years, not just on Kombat side, but if you have a look, we are the third largest uranium producer in the world. Very close by, we have the Tsumeb smelter, B2Gold, Usino Resources project, as well as Foresis and Codex right at the bottom. We also host Rossing uranium mine as well as Zusa, and excellent infrastructure to part with that as well. Great road infrastructure all the way down to the port of Walvis Bay, as well as rail, with power and water not being a concern at all. The mine, as I alluded to previously, has been in existence for 45 years. It's mined 12.5 million tons of ore at a 2.6% grade, copper grade, 1.6% lead, and 18 grams a ton silver. We are in production. We currently feeding up to 1,000 tons per day through the mill. We have an estimated life of 15 years in terms of resources, with a combined resource statement of 13.56 million tons at 2% copper, 0.73% lead, and a 14 grams a ton silver. We have over 150 million tons of infrastructure on the mine, and we produce a copper, silver, lead concentrate. On the upside and exploration potential, we have 35 kilometers of strike length extension, and we have a clear path to a production increase in future to 70 million tons. So, 70 million pounds of copper per annum. The complex consists of 3 distinct areas where mining will be undertaken. This does not incorporate the larger expansion areas of 35 kilometers that that extends on the boundary in the Utabi Valley. So focusing on free shaft, open pit commenced there during 2023 with an estimated life of mine or open pit resource of 4 years at 1% grade. The commencement of the open pit allowed us, in commencement of May of the open pit, allowed us to mobilize the management team, which allowed us in turn to commission the processing facilities in August of last year. That is all located on shaft 1. Estimated life there is 10 years, and you can see the significant increase in the average grade of 3.16% for the Asses West. Looking to the west, we have Asses Far West, which is a fully encased 850 meter shaft that was built by Wedleys and construction finalized in 2007, down to 850 meters with exploration drives at the bottom of it and drilling that commenced. So maybe just explaining the graph, because I do understand that it's fairly confusing. The feasibility study called for a mining profile of 30,000 tons from open pit and 30,000 tons from underground. If one factors in that the underground activities have increased significantly up to an average of 900 tons a day over a 30-day consecutive period, with the mill limitation that we have of 1,000 tons, we would always preferentially feed the underground material, leading to a significant stockpile of open pit material being built, which becomes very economically challenging over the long run. Just looking at the structure itself, all of the infrastructure that you see is in existence already. The orange areas are the areas of focus where it's ore bodies that has been defined, and that is the target areas. So as we've indicated, the underground pause until the feasibility study duplication of the throughput capacity from 1,000 tons a day to 2,000 tons a day, we would then reassess, obviously, the feasibility of the open pit as well. Very important to know, free shaft, which I will come and return later to, is not included in the feasibility study and was not incorporated as an area to be mined. Has yielded significant returns for us through underground exploration drilling, which I would clarify at a later point as well. The Asses Far West, which is definitely the future, as we've indicated, we're aiming to start dewatering during the latter part of 2025. Bear in mind, this is financial periods. We have a March financial year end and not calendar periods. We aim to dewater the shaft and then from there perform delineation drilling from the bottom of it. Returning back, the ability of the underground team, which commenced in February, 2 months earlier than what we initially had in the feasibility study, and their performance and going from strength to strength has really allowed us the opportunity to be in a favorable position to evaluate the options between continuing with open pits, which has a significant strip ratio attached to it, but at half the grade or a third of the grade compared to underground. What we therefore have decided is to pause as of effectively the end of September the open pit operation, and predominantly 3 reasons for it. It's a cost efficiency associated with the open pit mining, the focus on the higher grade from underground, and then, as I said, our milling constraint being 1,000 tons a day. In terms of the Sprott streaming agreement, it was also a key milestone for us to achieve and exceed the 900 tons. In terms of the Sprott agreement, we had until October of 2025 to achieve the 900 tons. If we did not achieve it, as part of a covenant in the agreement, a portion of the stream would have effectively converted into debt that would become repayable to Scott. So significant achievement, achieving that 13 months ahead of time really frees up the operation and takes off a significant covenant that did exist. Continuing over to
Renee, before we maybe get into this, there are some questions just the difference in grade. It's been shown on these slides, but if you could just highlight the difference in grade here when you move down underground from the open pit operations.
Correct. And predominantly the reason for the open pit being at lower grade is the limitation of dilution associated with it. You can mine a lot more selectively from underground through your development, as well as the limitation on the sizing of the panels that you blast and your advances. So a significant increase in grade from 1% at an open pit average to a 3.1% that is incorporated in the feasibility study for underground. So the contribution effect of that is significant. For every ton of ore that you process in 1,000, you're getting 3 tons more copper. Bear in mind, that is a life of mine. And obviously, as we do go deeper, that does increase. So the intention is, as we do go deeper in the mine, that grade increases significantly.
So it's really the process there. Hey, the deeper you get, the higher the grade you will be mining.
Yes, correct.
Okay.
All right. Just going over to free shaft. Now, important is that free shaft is not included in the feasibility study at the moment. We have been through the mining activities in one shaft, been able to gain access to free shaft, which has allowed us to commence with delineation drilling from underground. I need to remove this. What is clear is that we have significant resources available at free shaft. We intersected 3.32% at over 7 meters, 2.65 over 3 meters, 2.61% over 2 meters. Important to note, all the infrastructure is already in place. What it also does give us the flexibility, which we will be evaluating over the next 12 months, is the green area on this. The green area on this slide. Sorry. Thank you, Corey.
You're welcome.
The green area that I'm highlighting at the moment would have been the ultimate pit shell for the open pit. Through the pausing of the open pit, we will also be evaluating potential areas that we can access from underground, therefore freeing up a potential early stage ore from free shaft as well. Adding to our production profile and our achievement, bear in mind that we have sufficient equipment to mine 30,000 tons over 30,000 tons a month. So it's not just a once-off that we're in the upper levels. It has been designed, and we have been able to deliver on those design criteria as well. Maybe just looking at our guidance, and the clear contribution from open pit from Q3 2024 is evident compared to Q1 2025. If copper production went from 1.2 million pounds to 2.3 million pounds, and the C1 cash cost reduced from 3.96 to 3.23. Overall guidance for the period is $2.80 at the ceiling for C1 cash costs and $3.15 at the high end. Overall copper production 12.125 million pounds versus 13.448 at the high end.
What would the plant throughput be through all this? Because I know the limit is currently 1,000 tons per day.
The limit is 1,000 tons, and we've been able to exceed that for a short period of time. And therefore, we still stay within the guidance of 260 to 312,000 tons at the moment. It's the mills are old mills. It's been in the feasibility study and assumptions that we need to replace those with two new mills to be able to really unlock the value from the open pit and the underground and see larger volumes go through. Maybe just adding, I don't want to jump around too much, but shaft 1 is 470 to 500 meters deep, and free shaft is also in the ranges of 420 to 450 meters deep. So we won't use the shafts and we won't refurbish them. We have 2 declines that basically transcend the entire deposit and reserve.
Okay, thank you. You're seeing some of the questions that are coming in, so thank you for addressing those.
That's an easy one that came up. So maybe just looking forward and the potential upside that we can unlock through our project. The light colors on the presentation is the current infrastructure as well as the increase in production through the feasibility. So 12.5 million tons in terms of the guidance that we've issued for the financial year 2025, which goes up to March, which equates to 22,155 tons of concentrate. That through the increase in the throughput potential through the feasibility goes up to 27 million pounds and 44,000 that we can produce. SS4 West contribution, which is the darker brown area, is a significant contribution that we wish to unlock. If you have a look, the hoisting capacity for SS4 West is 70,000 tons, so 2,300 tons a day from it alone. That would require additional throughput capacity as well as processing capacity, and we could go up to producing up to 112,000 tons of concentrate, which equates close to 70 million pounds of copper. The cost profile also reduces significantly as throughput increases, as well as grade. So as you can see from 2025, rough guidance $303.15, which reduces to just above $2 in 2026, and a steady decline in that in 2027, which is predominantly the contribution from SS4 West.
So the fact of the matter is, getting underground, that's the production growth, and that it's going to lower the costs.
That's exactly it. So we've delivered on what we've set out to do a lot quicker. Just the feasibility study called for 15,000 tons from open pit, 15,000 tons from underground for the remainder of the year up to construction completion. And we've been able to achieve by October of this year, basically the full throughput capacity just from underground. Just highlight again, Jed Richards is our CEO and Executive Chairman. He's been on your show many times. My first appearance, thank you very much for hosting me. And then Tom, if there's any questions that we can't address in this, please do raise it and we'll be able to get back to you.
So, Rennie, let's get a couple other questions here. One dealing with what are some of the, or what's the growth potential underground as well as you've outlined, the better grade, lower cost, but also growth potential as you get deeper into the systems?
So the biggest growth, the limiting factor, and let me go back all the way, excluding SS4 West, our biggest growth potential in SS4 West, we're fairly constrained through being able to mine up to 30,000. There is, should the resources extend quite significantly, which it does to the west, potential to rehabilitate the shaft and increase mining capacity. Our current evaluation is with regards to free shaft. early mobilization into free shaft, freeing up some of the resources that we have there at the moment, converting those into reserves and mining those in conjunction with one shaft and being able to process it.
Now, regarding the mill, people are wondering, what is it going to take to get it to 2,000 tons per day? What's the process to get there? What's the time frame to get there?
So that's part of the current financing discussions that we're currently underway. We have had a couple of term sheets that we have received from potential financiers, and it's all part of the feasibility study. So we've been very fortunate through local support that we have in the country, without elaborating too much. But there is a future for obtaining financing to be able to start with or commence with the construction and increase of the entire complex. The concentrate upgrade itself is not as significant. The biggest items there are the mills, a little bit of optimization on the crushing, but those have predominantly been sized already for a 2,000 tons per day plant. The flotation sections also by far in majority up to 2,000. So the mills are really the constraint that we need to make sure that we can get them up to 2,000.
How about going deeper than that 800 meters?
So the 800 meters on SS4 West, this alone, so let me highlight this. The SS4 West shaft alone has a hoisting capacity of 2,333 tons a day. So that's 70,000 tons a month. That's a bit more of a longer term and longer lead time project. We would need to dewater, get down to 850 meters, perform additional exploration drilling, and that would call for some significant expansion in the overall plant itself.
Okay. Now, just for clarification, the big cost reductions in fiscal year 2026, are they mostly around the expansion of the mill?
It's predominantly due to the economies of scale, as well as the dilution of your fixed cost. To operate a 1,000-ton plant or 2,000-ton plant requires roughly the same amount of people, but the dilution effect is significant on it. And that's especially considering just focusing on underground material, which is at a 3%, and in the case of SS4 West, your operating cost is not the key driver there, it's more the dilutionary effect that you get of volumes.
Okay. And the dewatering, it's ongoing, right? There are questions around dewatering. It is in progress, I guess we can say?
It's in progress, yeah. Not for SS4 West, that's a longer term progress, but as part of normal operation, correct.
Okay. So Rennie, what do investors need to look out for here as we move forward? We're getting a lot of financial questions, but I know the financials haven't been released yet, so you can't even dive into those. We don't want you to get in trouble by disclosing anything that isn't public. So what are news events that investors can really hang on to understand that this transition from the open pit to underground, where grade should improve, cost should go down, that all this is going according to plan?
I think the biggest news results would be in the results coming out for Q3, Q4, as well as further down into 2026, understanding the impact of being able to sustainably mine from underground itself. We've also at the same time we've built flexibility and resilience in our system through having open pit ore stockpiles as well as underground ore stockpiles that would see us through any potential processes where ore might be lower in certain periods. So we're definitely building a robust company, and looking forward, we can't discuss any financial information. We just had a quarter end yesterday, so those are still being finalized, but looking forward to a bumper Q3, Q4 coming up.
So would you say that this ramp up and this transition is going according to plan then?
Oh, it's exceeded all of our expectations by far. We've planned to only be able to mine 15,000 tons from underground and 15,000 tons from open pit for the remainder of this year or for the full year 2025, or financial year 2025. So being able to increase that the underground potential is significant. I do also want to extend my appreciation to Tulelo, who's the mining contractor of choice that has been with us since 2021, and look forward to potentially returning to open pit in future.
Okay. Hey, Rennie, thank you for addressing these questions. I know still a lot of financial questions here, but we're going to need to address those to Jed, the CEO. So you know what? I'm going to follow up with Jed. I'm going to set up an interview with him to address all these other questions that have come in from all of you tuning in. Thank you for tuning in. And I'll get him to address these financial questions. This really was just a production update to hopefully bring you all up to speed on that transition from the open pit to the underground. Time-wise, it sounds like it's going according to plan, as Renee has outlined for us. Look at the financials when they do come out. I'll also follow up, but everyone email me any further questions. I'll also move this to the slide, the contact information slide. So make sure you send in your questions to the company. They will address them personally. I will move this around for you. There you go. There. Email the company your questions. I'm saving all the questions from this webinar so that we'll get follow-up answers from Jed on more of the financial side of things. So, Rennie, thank you very much for taking time to give us this production overview here, and I'm sure we'll be doing another one of these in the meantime. Everyone, thank you for tuning in, and thank you for sending in all these questions. I'll follow up and get them addressed for you.
Thank you very much, Corey. Thank you very much for everybody that joined us.